Thanks for tuning in to Look at My JPEG, the podcast that discusses NFT, DeFi, and NFT financialization. This is your host, Xerox Jose, the founder of nftperp. The reason why I want to do this podcast is because there's just not enough people talking about NFT financializations. In this podcast, you can expect us to invite guests that are builders, founders, even investors that are deep in the NFT financialization space. We'll discuss their story, what they're building, and how you can get involved. So thanks for tuning in. All right, Nick is on. Here we go. GM. Thank you guys for joining. This is a very special episode. It's a 38 episode of Look at My JPEG. And we thought we've been running this pod for a while, and nftperp traders have been actually one of the most interesting traders in the space. And I think given them having a ton of experience on nftperp in this sort of new vertical of NFT derivatives market, we thought it would be good to get them on, just have a conversation, chit chat a little bit, so we can get to have other users in the nftperp community get to know you guys. So that's sort of the intention. So yeah, thanks for coming on to the show.
Yeah, my pleasure.
My pleasure.
All right. So today we also have Ryan joining us as my co-host. So I think this is probably your first time speaking on the pod, right, Ryan?
We did the one with Pudgy, but yeah, this is I'm super excited to talk to you guys because I might be the worst trader ever. So yeah, I'm gonna be the one asking the dumb questions.
Okay, we're gonna all dunk on Ryan later. Before we get into more specific trading questions, why don't you guys give us a quick intro of yourselves? We can start with Nick. Tell us about how did you get into crypto? Besides trading, what do you work on? And then we can move on with other questions that we had.
Yeah, sure. I got into crypto in 2017, but it was mostly from the sidelines, investing a bit. It's just, I think some friends taught me about it. But at that time, I was also still sort of busy with my studies, so I kind of forgot about it a bit again. But then I really got back into 2020 into crypto because I've also got a technical background. So that's then also really when I started developing myself, was co-founded my own local DAO here with a couple of friends back then here in Munich, who I'm currently calling it from. Worked on my own NFT startup for a while. That was in basically the whole of 2022. Yeah, that's very briefly sort of my background, and besides that, I already teased it a bit. So I just started my PhD actually. So next to all the degen stuff, that's what I'm pursuing currently.
Congratulations!
Yeah, thanks.
I saw on your bio that you're the founder of Pretzel DAO. What is Pretzel DAO?
Yes.
It sounds very German.
Yeah, exactly. No, so that's the DAO I was referring to. So it started in 2021, and back then I actually visited the first Ethereum conference ever, and there was in Lisbon, and it was called Liscon. So I was and I met some friends there in Lisbon, and basically on the flight back, we were thinking, hey, it really sucks that we don't have a nice Web3 community here locally in Munich. So that's kind of where this idea came. Okay, let's sort of try to start to pool all the people together, because often in the crypto scene, there are a lot of sort of hidden players who might be really awesome or they're doing cool stuff, but you might not necessarily know about them or what they're doing. And that's sort of how we started it. And of course, we need a great name. And given that we're here in Munich, what would be more obvious than Pretzel DAO? And that's how we started. And now we grew a lot over the last 2 years. We are over 200 members now in the DAO, and we also recently organized our first hackathon, ETH Munich here. So that was 2 months ago, was 200 hackers, and was really awesome. So yeah, that's Pretzel DAO.
Fantastic. Let's get over to Fendi Man a little bit. Fendi, welcome to the show. Tell us a little about yourself. How did you get in crypto? Yeah.
Yeah, sure. Hey guys. My experience is similar to Nick.
I start crypto around 2016, 2017-ish. And from 2020, I start DeFi farming and also enjoyed the NFTs in 2021. And later on, I figured out a lot of NFT-fi stuff, including nftperp. So I think that's a pretty niche market compared to the DeFi space, and there's a lot of opportunities and less competitors. So I start to spending more time on the NFT-fi things. nftperp is definitely one of the best. So back about like 1 year ago, October 2022, I found nftperp and I joined the like testnet trading competitions, and then following on the mainnet competitions until the version 1 sunset. It's a pretty nice experience. I made a lot of friends over there, not only profit, but friend is more important. Yeah, that's basically my background.
Yeah, and speaking of profiting, I think you're in. If I'm correct me if I'm wrong. I think you're in second place in the paper trading right now. So you're in line to take my Sproto away from me.
No problem.
Yeah, I guess like I don't know. I'd like to kick it off into maybe some like trading questions. And maybe we could just like start with like the data. So I guess like first and foremost, are you guys like both running bots? Are you doing things manually? And if so, like I'd be curious like what data you guys are looking at, how you're ingesting it, you know, what you're doing to like Spot plays a large role in everything. Curious how you just like think about the data, what's important to you, what you're looking at.
To me, like version 1 nftperp is basically front running each other's because it's virtual AMM. And what I was doing is that I just following all the spot market moves, like people big sweep, big dump, and I'm trying to do corresponding trades on the perp. That usually works. So I'm setting up a bot, several bots actually, like following spot market moves. Yeah, and regarding the trades, I have some bots like making trade for myself. Like whenever there's big sweep, big dump, I set up a bot to buy, long or short, like some positions, and also I'm doing manual based on what others guys do. So it's quite a lot of game theory inside. How about you, Nick?
Yeah. So I mostly or exclusively actually like running bots. And in terms of data, so that's also a funny story because so Fendi and I would actually already know each other for a bit because at the start of V1, or like basically to be honest, during the whole of V1, I also had one bot that was just exclusively copy trading Fendi mail, and that's kind of how we got into contact. And because Fendi, I think you first reached out to me. But so that was, if you will, one data point. But apart from that, of course, we're looking on all the on-chain data and then also data on what's happening on the spot market. And now, of course, now that sort of V2, like the testnet is live. Maybe we'll talk about a bit more about this later anyway. But now, of course, there are like also more ways to sort of profit. And currently, we are also like doing some market making for the order book, basically.
Yeah, I appreciate the color there. I'm wondering, like, do you guys pick specific trading pairs on NFT Perp? Obviously, right now it's in paper trading. We only have 4 pairs right now, but when V1 was up and running, we have up to 7 or 8 pairs on the exchange. Did you guys focus on specific market pairs due to liquidity, volatility? Like, do you have a preference?
To me, I was keeping eyes on everything, but definitely, some trading pairs are more active or more volatile than the others. I recall like there's a period like there literally no trading on spot market on CryptoPunk. While um, when Elon Musk tweets Melody is basically is the craziest pair I have ever seen. So yeah, my bot basically keep eyes on everything, while my manual trades is focused on the most volatile pairs.
Um, for us, so during the V1, I mean, there was no order book, and it's mostly you just trade on volatility. So if there's no volatility, then it's more difficult to make trades. So then we were specifically looking at sort of how the VAMMs were initialized in terms of sort of like what the K factor is. And because not all the pools had the same K factor, so some were inherently more, there was more volatility. And I think there was also why Miladies was so volatile, because it was quite easy to influence the price. So yeah, these were kind of the pools we're looking at specifically. And of course, also as Fendi said, when Elon Musk tweeted, of course, if he tweets, then it's always crazy volatility. So yeah, that's what we're looking at.
So yeah, I appreciate that. And with regards to your experience on V1 until now, I guess we're kind of just free flowing here a little bit. Like, how is your experience so far with V2 implementation now that there's an order book? Do you think the UX has changed a lot from your perspective, and what do you like and or not like about it?
To me, definitely see V2 is a improvement on V1 in terms of the mechanism. But it also introduced a lot of like new stuff. You got to think about the limit orders, and there are something that I'm also trying to get myself familiar with. So far, so good. I think I'm on, yeah, as Ryan said, I'm on second place, and there are other guys on the ahead of me. However, because it's paper trading, so like you don't, you cannot take it too seriously. People do crazy things when they are not using real money. So I'm looking forward to the mainnet when we can use the real ETH on trading. Yeah, how about you, Nick?
Yeah, of course, same as you, really looking forward to when the real trading starts.
Hey Nick, we can't really hear you.
Okay. Let me see. You still don't hear me?
A little bit quiet.
Quiet. Okay. Well, then I guess I'll just try to speak up. Let me know if I just drop again. So I think the experience is better on V2 because there's less slippage due to the order books. Because in V1 it was really difficult sometimes because there was so much slippage. But now, also let's say as market makers are doing more, it's it really improved the trading experience for me, and it's also like an interesting factor that we also still want to explore, sort of how you can trade against the order books in the most smart way. So that's it.
Just curious, guys. Like, how do your so and maybe Fendi, you can answer this first, but like you said, you can't take paper trading too seriously. Like, how do your strategies change from paper trading to live ETH? Maybe you can just give a high level overview. Like, are you like pretty much YOLOing in paper trading? Like, I'm sure that's not the case because I did the same in paper trading and I lost all my mock WETH. So yeah, just curious how you guys think about it, between live and paper trading.
Yeah, so for the paper tradings, I saw some strange behaviors, like people dump on the order books where sometimes the penguin can go up to 9 ETH, and some large spikes I saw on BAYC as well. So to me, people will not do these things when they are using real money. Also, currently you see some guys are YOLOing like let's say 100 ETH notional into the market, and that's a little bit too much. So and also people don't care if they are being liquidated or not. In real world, I think those guys will be a little bit more cautious. At this moment, when I'm doing paper trading, I can also bet big after the spot. When I see a spot market moves, I try to basically bet let's say 50% of my net worth. But in the real case, I probably will just try to open a small position and see how the market moves. So yeah, I think there's some difference. I recall there's a difference between the testnet and the mainnet for the version 1 nftperp. And when people tend to trade more trade a large position, significant position when in the testnet version 1. However, when the mainnet starts, if like Joe recall that you guys set the K value of AMM too large, so that's each trades cannot really move the spot market price, like a per market price. So yeah, I mean that's kind of different to me.
Yeah, I agree. So I think that now sort of the paper trading is good to, let's say, try out some crazy strategies, some crazy ideas that you had that you wouldn't do sort of with actual money. But I agree with Fanny that I'm sort of not sure how representative it will be of the actual trading. So this is also. So I should say we didn't participate in the paper trading for V1 because, as I understand, there was also paper trading. So I cannot. So we don't have sort of this data point back then. Okay, if this happens in paper trading, sort of this is what we can expect in trading, with real worth. So this is something we're really looking forward to. Overall, I think it's still fun, and I mean it's good that you guys incentivize it because otherwise there would be basically no one trading. And I think at the moment, so I do still think there's like much less sort of trading happening on the platform than when it was with real worth, which is also another factor why it's maybe not like super reflective of the real world. But overall, I think it's just a good playground to do some crazy stuff and things like that.
Yeah.
Oh yeah. I was gonna say that's pretty fair. Initially, when we launched paper trading, I would say we had a little bit more active users, and as people kind of get used to the experience, they kind of tail off because at the end of the day, it's not real money, so it's hard to kind of keep users keep testing the protocol, if you will. But we assume a lot of the volume and daily active users will come back once it's real money because there is opportunities out on the market for you to take longs or short with leverage.
Yeah. I mean, really, it's for us to test V2, as you guys know. So, fully agree with not being fully not reflective of live trading. Just curious though, so with, and I guess in today's market, NFT finance landscape is changing a little bit right now, specifically with like flooring launching, which is, to my understanding, it's essentially like a NFTX, and except what they had done is they had swept a bunch of NFTs months leading into their launch, and they hold. I think they purchased like 14 or in today's value, like 14 or 15 million worth of NFT assets. And yeah, just curious, like, when V2 launches, which hopefully sooner than later. Curious, like, how you think of other NFT finance protocols, and do you guys look at, the like, will you like? So I guess like, will you look at like blur bids? Like with the introduction of blur bidding, that kind of changed the market. Flooring may change the market a little bit. Maybe Wasabi options kind of catch a bid and get some volume. Curious, like, do you ingest anything outside of spot to make your decisions?
Go ahead, Nick.
Okay. So at the moment, not too much. What was interesting is, so usually, maybe to take a step back, but let's say if you're sort of trading spot competitively or something like that, then of course, usually you have these arbitrage opportunities, right? Because you could buy this asset on one exchange and then sell it on a different exchange. That of course doesn't work when you're trading perpetuals because there is no asset that you get in return. But what I was looking at for a while is, so there was a time where you guys were live, and then I think there was also another nftperp platform on Arbitrum, I think, Tribe3. So then we were looking at how can you sort of make use of sort of, because the spread on Tribe3 or like any other NFT perpetual platform and on nftperp might be different, right? There might be different spreads, and also the stock price, the mark price might be different, and potentially even the Oracle price. So we were looking into sort of how can we leverage these sort of differences and sort of trade against the spread on both platforms or something like that. But at the moment, I think you guys are more or less again the only one on Arbitrum, which is of course good for you. And regarding flooring or something like that, didn't look into it too much yet. Also not blur bits, but I think it could be an interesting opportunity. Fendi, what do you think?
Yeah, I'm like active on flooring and also blur farmings, and there are definitely some arbitrage opportunities between these two. So what I'm also doing is that like taking bids on the blur and dumping on the floorings, and also vice versa. But I think it's a perp market is a different space, and it basically provides additional arbitrage opportunities between the perp and the spot. I also recall there was some arbitrage opportunities between the NFT perp and like, let's say, NFTX. At the time, like you guys are using that for some of your collections, index price. In my opinion, understanding the whole space is quite important. Like you can figure out additional opportunities, like doing arbitrage and also doing hedgings for your position on one platform and on the another. So yeah, and I'm active on and I'm interested in all sorts of NFTFi platforms, and you guys can introduce new ones to me. So that's why I'm listening to this episode in the past.
Oh, nice. Yeah. I mean, there's definitely a lot of given how large the market is. There's definitely a lot of NFT5 projects. Will they all be around in 6 months, a year? Probably not. But yeah, there's a lot. I guess like Fendi, there's something that stuck out to me. So you said you traded, you participated in DeFi a bit as well. Is that right?
Yeah.
So like if we use like DeFi as so it dwarfs the NFTFi more broadly, right? And you said you moved over to nifty-fi because there's less competition. I don't know if you participated in like DeFi Summer or anything like that. Imagine maybe it doesn't fully reflect that. Maybe we're even pre, DeFi Summer for NFTFi. But I would be curious. Let's assume like NFTFi grows. How do you think the competitive dynamics change? For being a trader more broadly, like, just curious to hear your thoughts there.
Yeah, I think these days NFTFi is like DeFi space in like early 2020 or like late 2019, when we have like Uniswap, Compound, or just a few of the other OG protocol. And I was in DeFi like in those old days, and it's a really good old days. You basically can do all sorts of farming and arbitraging between each other. I see, but right now, like definitely DeFi is more saturated. You see all sorts of sandwich bots, and like normies can not really pick up monies from the street. For NFTFi, definitely much a niche market. And I see nftperp as one of the best NFTFi NFT derivative, and also definitely we have like Blur. I think they are pretty strong, and their products are quite nice. But not a lot other things that's catching my eyes. Maybe a few. However, maybe in next year or maybe after 2 years, this market will be more competitive. And right now, I think it's a good time for us.
And basically, like, when do you think it will be more competitive? Like, it will just be run by bots for the most part, and it'll be more difficult to manually manage positions and such.
Oh, I think it definitely will have more bots. Actually, from very beginning of the nftperp, there are only a few people, including me, just doing manual trades. But at the end of the day, we have several bots, including Nix and maybe 2 other guys, at least. So, however, those bots just doing like market making or arbitraging, while in my opinion, when this whole market is getting more mature, we will see more users doing like, let's say, hedging on their NFT spot position, etc. So I hope this whole market will grow, and the NFTFi space, NFT derivative should be bigger than, or at least similar to the DeFi space, like perp market, in my opinion.
Yeah. I mean, obviously, we hope so too. Nick, did you do anything in DeFi prior to jumping over to nifty-fi?
Only a little bit. I mean, of course, I participated, let's say, in some of the many forks back then, if you can call this DeFi, bit of yield farming also on Phantom, but that was also really just mostly manual trading. But then NFTFi was really sort of where I did it more professionally, which was also because I was very active basically during this whole NFT craze. Basically during the NFT summer, but there was only sort of, back then I was also only doing manual stuff, basically just flipping on back then only OpenSea, and then also Blur opened up. So as such, of course, during that you already get some more experience, and then I was really happy to see that now that basically you guys enabled trading NFT perpetuals, so, and also with a very smooth interface. So that was kind of a natural jump for me. And also just fitted basically what I already had been doing for the last year.
Yeah, cool. Makes sense. I guess they're probably. So I guess maybe like, you have something, Joe?
Oh no, I was just gonna say like, Ohm is probably one of the the cream of the top of like DeFi during the DeFi craze. I was going to chime in a little bit. Go ahead and ask your question.
Oh no, go ahead. I mean, you participated in DeFi quite extensively too, Joe. If my memory serves.
Yeah, I think like the craziest DeFi protocols I've touched, like during the DeFi run, like almost one of them. I think Magic Internet Money was another one, and probably the craziest like DeFi experience that I had in the past was just the algorithmic stablecoin era, where you have the DSD. People are literally buying tickets and trying to repeg tokens and aim for bonds. That was like the most fun / like micro weird inflation economics of a small DeFi craze era. It was a lot of fun, a lot of game theory.
I guess what were some of your learnings personally? And when I say that, like, I assume there were some big wins and some big losses. Maybe you guys can talk a little bit about those and what you learned from them.
Yeah. I mean, like, it's interesting because it helps you understand. This was like a lot of like early implementation of different DeFi idea. It's all very game theory, trading, supply and demand type of mindset. It ultimately, at the end of the day, I think from a macro level, it helped me understand where does supply and demand go in a token in DeFi protocol, and understand where value flows, and helps you understand like if you are the exit liquidity or like how to spot like exit liquidity scenarios where a lot of times it's like completely P2P and zero sum game. I know that sounds pretty broad, but in your early days of DeFi, that's where a lot of people are learning, and when you can see through that lens, it helps you like design better economics and protocols later on.
Well, this is like actually, I'm gonna kind of like pivot here a little bit because I've been thinking about this a lot recently and curious, like Fendi, Nick, to get your thoughts too. But like, this is what makes like non-fungible tokens so fucking crazy is like you can like theoretically, like if you're playing with somewhat size, like you can own fucking like 1 to 5% supply of the collection, and completely. And this is like the challenge that we face internally is like when building like a perpetuals protocol, it's like, okay, you could get like insane volatility on these things. Like, for instance, I think it was like even yesterday, I think Machi got hit, or not Machi, but I think Hanwei got hit with like 100 something DGOTs on Blur. And just like that alone is insane and something that you wouldn't necessarily see in DeFi. Like, I guess Nick, like Fendi, Joe, like how do you guys think about that when trading? Like, do you guys like look at wallets specifically, do some like wallet tracking? I imagine so.
Yeah, I think this is really what makes NFTs so interesting and also so fun to trade, because they're so illiquid. So as you said, if you already own a little bit of size, it's like quite easy to influence the price significantly of some collections. And as a result, also for you guys, I find it very interesting to observe how you, let's say, program your Oracle. Because then the question is, if there are these crazy outliers, right? Is that something that you also want to reflect in your Oracle? And if you do that, the question is to what extent. So that's always the question. Of course, I can let's say look at the big whales and see what they are doing. But then it's like, to what extent does that actually influence your Oracle price, right? And sort of the Oracle price is one of the most important features of your platform as a whole, right? Because if that doesn't work, or if that doesn't reflect, let's say, the real market, then of course it doesn't matter what's happening in the real market, and I should just somehow try to game the Oracle. So I always find it very interesting when when you change Oracle a bit. And I think Fendi is also always paying a lot of attention to the Oracle, and people are trying to figure out sort of what influences the Oracle to what extent. And that's also like a bit of then the game theory part. Basically, if I do X, to what extent does that reflect the Oracle price, right? And because if it reflects the Oracle price at one point, then also the mark price will, adjust towards Oracle price. So this is really interesting. And sort of to that extent, we can look at some bigger wallets and then try to understand how that moves the mark price. Or the Oracle price rather, but that's still something we have. So we're not really doing that much at the moment, but that's still something that would be very interesting to do in the future. Fendi, what do you think?
Yeah, I think it's as Nick said, it's interesting but also challenging problems, especially NFT market. It's like it's like a shit coin, but it's more volatile than shit coins. As you said, like people can have like 1% to 5% of the total supply and dump all of them like at one moment. Like that's quite crazy. So I that's also the reason like NFT perp as a perpetual market will be quite difficult to operate, in my opinion. For V1, I see at the end of the day, like it's too volatile, so that the whole V1 design didn't actually work in that market. I hope V2 can solve some of the problems. We will see. However, and also in terms of the oracles, I cannot agree more on this with Nick. I think people can manipulate the Oracle price quite easily. That's the reason I really appreciate the Blur's design in terms of their lending protocols. Like it's P2P, and you don't really relying on like a specific index price. Rather, you do lending between persons, and one of them can decide to pour out the funds when the lenders feel like this market is falling, and there's no like a specific oracle price. I don't really know how to avoid this issue in NFT perp market. But I see you guys improve the Oracle price quite a lot in version 2. However, I still see there's some glitch in, let's say, CDB during the testnet. I hope you can fix those. Yeah, I mean, that's a quite difficult problems. I have to leave that to Joe.
Yeah, I'll chime in a little bit here with regards to two things. Like number one, with regards to like larger supply, and this is a good, yeah. Thanks to Ryan for teeing this up, because it is a common question that people have with regards to the idea of NFT perps for NFTs, and the number one question that people ask is like, oh, like, why would you do perps for NFTs? It seems very easily that a whale could, influence the price of a collection. While that is true, I would counter and say it all depends on what is the cost of manipulation and what is the reward and payout that you will get on perps. So as a protocol and an operator and builder of the protocol, we just need to keep in mind and be conscious of what are the open interest caps we're giving out to traders or protocol as a whole. What are the sort of the margin requirements for different levels of leverage that would restrict the payouts potentially on any sort of market manipulation. And we're trying to minimizing the costs, minimizing the reward on the OI side, so that the cost of manipulation is always going to be higher than what you get on perps. And within those assumptions, when you operate, you can get to quote unquote safer environment for users on the protocol. That's number one. Did you want to chime in a little bit, Ryan?
Oh, yeah, I did. Fully agree with that point, Joe. And then, I guess I would just add, like, adding, obviously more liquid collections, kind of protect against this a little bit, which is one of the reasons why we listed CDB, is to kind of like flex that assumption around the Oracle. But yeah, and then also just wanted to flag, like, having counterparties, hopefully helps against, obviously that doesn't touch the Oracle, but hopefully it's an improvement in our V2 design. But that's like, I mean, you're kind of spot on, around V1, Fendi. And then unless you have anything to add also, Joe, like maybe we could open it up. If any of our listeners want to ask questions, like feel free to.
Oh, but before we get into that, like one last thing with regards to Oracle, I completely agree. I think V1, from a lot of our learning, we were very conservative in the sense that we think the Oracle itself needs to have a strong enough TWAP. And we saw in different instances when a too slow of an index TWAP actually resulted in bad debt in the market books on V1, which was not necessarily the best thing to do. So with regards to our V2, we actually have a slower TWAP. However, the liquidation doesn't really revolve around the index price in the current implementation. So we're focusing on our internal markets a little bit more and prioritizing, the risk of bad debt for the protocol and bad user experience, so that there won't be any index movement that's causing cascading liquidations, etc., for the users. So we think ultimately, if you're able to operate within your own book, be price independent, and have a decent liquidation engine that is more conscious of your mark, and it's less manipulatable, it should result in great user experience. And lastly, I think market makers that are providing liquidity need to be just aware of the spot markets and activities in general. Like if you're seeing very obvious sort of mass dumps caused by a single wallet and whatnot, you just need to be aware and pull your bids if you need to, and not providing very significant liquidity to be arbed into. That's kind of my take with regards to the points you guys brought up.
Does anyone want to come up and talk or ask questions?
I want to quickly say a couple words. Can you hear me?
Yeah.
Yeah. Hey.
Hi, Esther.
Hi, Fendyman. So yeah, I just quickly want to say hello to Fendyman and Nick. I think I've been interacting with these guys since inception of V1, going back and forth. These guys have helped me help the protocol a lot in tickets and refining the SDK APIs, whatnot. One thing I wanted to quickly get a review on from Fendyman was, once at a time he was my nemesis on both trying to liquidate. And he was better, and he had a lot of inputs on liquidation. Then we discussed in DMs back then, V1, and now I'm not sure if Fendyman is being an active liquidator on V2, or he knows the liquidation mechanism. So but I'm sure he's going to be liquidating in V2 mainnet. So what do you think the thoughts of, as a liquidator, which one, or any thoughts on these two different types of liquidations we have here?
I was playing a little bit liquidation on V2 at the very beginning until I took up a position, try to liquidate others, and at the end of the day, I was being liquidated. So, and my money is gone. Luckily, it's just a fake piece. So I don't know. Did you guys make more changes? I didn't follow up, to be honest. So what's the current liquidating mechanism? It's a Dutch auction, or can you just comment more on that?
So it's basically you get a discount by posting collateral upfront of your liquidation reward that you used to get in V1, except you get that much discount on taking over a position, and you get assigned that position, and you're free to do whatever you want. I think you know that. But yeah, regarding the change you said, where the liquidator gets liquidated, I think we've worked on resolving that. But yeah, this is just the design of difference in V1 and V2.
Yeah, I saw right now like people or liquidators taking over a position and then dump on market like with some TWAP. Like they dump maybe 5 ETH notional a time, like every, let's say, 10 minutes or so. I think that should be better than version 1. Like I think version 1 cascaded liquidating is horrible. But on the other side, I think this probably also, like I think it's pretty new. Like I don't see any other like perpetual protocol doing similar, or at least on NFT market. So I do really like look forward to the mainnet liquidation. Let's see how it works. So far, I think the testnet liquidation mechanism works fine to me, but it needs to be validated on the mainnet.
Yeah, and we're constantly making some improvements. We have some additional updates coming up that will. I was going to say we have some additional updates coming up pretty soon to kind of optimize that experience as well.
Yeah, appreciate it.
I guess any other thoughts before we close it out? I really, by the way, guys, like really enjoyed speaking with you guys more broadly about trading stuff, and yeah, would love to bring you guys back as well.
Yeah, I guess before we wrap up, I do have a final question that I wanted to ask. Maybe you have something, maybe you don't. What are the more interesting things that you look forward to seeing in NFT finance haven't been done? Or what kind of like markets would you like to trade on NFT perp that you think will be very interesting?
It's a tough question. To me, I think other side of trading, I do think NFT is fun, and I really want like trading NFT perp can give me a lot of fun as well. So I do like just tell you a like personal story. I was making quite a lot of friends with teams and also some other traders. I do like NFT perp introduce more like social elements. One of the things I think I mentioned to some of the team and the other guys is like you like on the UI you can sort of talk to other traders like what are you doing, and you see their positions, and you can basically chat with each other when you guys are trading. Let's say one of them have a position and it's going to be liquidated, and then you can work on them like what you guys doing, like just to capitulate or something like that. I think trading NFT is not like is different from trading like ERC Trend tokens, and it should be more interesting.
Yeah, fully agree with that. We will be implementing some social elements on the platform over time, and yeah, basically you just want to flex on some people, huh, Fendi? There's nothing wrong with that. What about you, Nick?
So can you just repeat briefly like the question, because I had some problems hearing Jose. Sorry.
Oh yeah, just like what kind of things you may want to see on the platform, pairs that you may be interested in, etc.
Yes, cool. Yeah, overall, maybe before I say that, I think already what you have so far is really great. So props to the whole team. I think you have I think you have the smoothest sort of trading experience that I've seen, and I think your front end works really great. And but yeah, of course, what I would love to see is more pairs, maybe also more degen pairs. If that is possible, I think it could also be really fun to sort of just list some pairs for, like, let's say a short period of time, basically just when there's really the hype going on, to briefly list a pair. I think it could be really fun. And then in terms of like trading aspect, I think it can be really fun if you have your own profile on the platform, kind of similar to what Fendi said. But I think at the same time, if you want to be more private, I think that should also be possible. So if maybe you do not want to flex on other people, or maybe you just want to act more from the shadows, I think it should also be an option. And I think it's important to somehow not draw attention to yourself if you don't want that. So yeah, these are the things.
Yeah, that's cool. Yeah, I'm a big obviously Sprotos. I feel like there's been a lot of volatility there. That would have been a fun one to have. Maybe we'll include it. I think we maybe do one more paper trading, still TBD through November, and maybe we can include it there. But yeah, like definitely something to look at for launch for sure, as well as some other stuff. Like there's some other good assets as well.
Yeah, I think for those collections with the enforced royalty fees, and that's also perfect for perp trading, because for sport you have to pay fees, and that's additional friction. Those I think will bring some volumes to the perp trading.
Any other questions from the group, guys? Cool. Yeah, like to have you guys on again for sure.
Thank you guys for coming on. This has been a blast. We got either with you guys again or with other community members.
Yeah, thank you guys.
Thanks, Nick. Thanks, Fendi Man. Talk to you guys soon.
See ya.
Cool. Thanks. Bye-bye.
Thank you for tuning in to Look at My JPEG podcast. If you're listening on Spotify or Apple Podcasts, wherever you get your audio podcast from, give us a like, a subscribe if you like the content, and we'll see you in the next episode. Cheers.